Hey guys, I'm Annie from FX Scouts. So today we're going to be talking about currency pairs and more specifically the majors, the minors and the exotics. And we're going to be talking about the differences between the three. If you have any questions, please don't hesitate to contact us at podcast@fxscouts.com, or alternatively, don't hesitate to contact us on any of our social media channels. Enjoy the episode.
Hey, Alison.
Hey Chris, how are you doing?
Yeah, I'm okay. It's a bit early in the morning for me, I have to say. We were going to try and record this yesterday afternoon, but then you lost your power.
Yeah, but I was impressed that it was restored in the evening. So at least we had power this morning.
Oh, that's pretty quick.
There was apparently a big fire.
Oh, a big fire. Gosh, terrifying. Well, but yeah, no, it's a bit early in the morning, so you'll have to excuse me if I sound a bit sleepy. I've still got some sleep in my throat. But yeah, no, it's nice to talk to you. Nice to be back in the swing of things. Yeah, and I'm good. So what are we getting into today, Alison?
Yeah, well, as I said earlier, we're going to be talking about currency pairs and the differences between the three major classes of currency pairs. But before we jump into that, I thought we might go through a little bit of the basics.
Yeah, exactly. I think that's always a good place, just a refresher for people who are just starting out with Forex trading. So Forex trading involves the buying and selling of currency pairs. Each pair represents the relative value of one currency against another. So when you trade a currency pair, you're simultaneously buying one currency, and then you're selling another. First currency in the pair is called the base currency, while the second is called the quote currency. And the exchange rate indicates how much of the quote currency you need to buy 1 unit of the base currency.
Yeah, exactly. So if we look at, for example, the Euro USD, the Euro is the base currency and the USD would be the quote currency. And an exchange rate of 1.1 means that in order to buy €1, you'd have to spend $1.1. And it's basically the constant fluctuation between these exchange rates that creates the trading opportunities.
Yeah, exactly. And that's where you make a profit is from these fluctuations. So let's now that we've got that covered, let's look at the major currency pairs. So these are the most actively traded in the Forex market. They always include the US dollar, which is because of its central role in global finance. And there are 6 and sometimes 7, depending who you talk to, on major currency pairs. Those are, as you just talked about just now, the Euro USD. That's the most traded in the world. The second is the USD JPY, which is the Japanese yen. The second most traded. Then there's the pound, the GBP versus the US dollar, the Australian dollar versus the US dollar, the US dollar versus the Swiss franc, US dollar versus the Canadian dollar, and then sometimes people also include the New Zealand dollar to the US dollar.
Yeah, exactly. And these pairs are very popular among traders for quite a few reasons. So firstly, because of their high liquidity, major pairs have very high trading volumes. So orders are executed very quickly and you have very little slippage. Then they have very low spreads, again, because of their high liquidity. And the Euro USD, for example, has the lowest spreads among the 7 or 6 pairs, depending on what you regard as a major. And this is also because they are the largest economies in the world. So brokers don't have to charge as much just because they're so highly traded and there's such high trading volumes. And then these pairs are also the most stable and the less volatile, just again because they are so highly traded. And so this makes them much more suitable for beginner traders.
Yeah, exactly. The Euro USD in particular is really a go-to choice for a lot of beginner traders, but also a lot of experienced traders. They never move out of the major pairs for all these reasons above. There's low spreads, high liquidity, stability.
Yeah.
They're really easy to trade, and they're relatively predictable. As you said there, they don't have the volatility. So yeah, really, if you're a beginner just starting out, the majors, they offer a really stable and accessible entry point to the Forex market. And they're going to provide you with ample trading opportunity as well because of the high liquidity. And you can use pretty much any strategy available with these with the major pairs.
Yeah, I mean, if we look at the major strategies that people generally use with the major pairs, they would use trend following, which obviously involves identifying the major trend or higher highs and higher lows for an uptrend and lower highs and lower lows for a downtrend. And also, all the major pairs tend to exhibit quite long-term trends, again, because they're more stable than the minor pairs and exotics. And then if you look at another type of trading that people often use is breakout trading. So this is where the price breaks out of key support and resistance levels, and the major pairs again are very suitable for this strategy just because of their high liquidity. And then of course range trading. So as we saw at the beginning of the year, we saw that the Forex market was very little trading activity that was happening. There were a lot of ranges that were happening among the pairs. And this is also quite common among the majors. So with this strategy, you would buy at support levels and, of course, sell at different resistance levels.
Yeah, exactly. So, yeah, and you're right. Like the major pairs often end up in ranging patterns, which is quite good if you're a beginner just starting out. There's no extreme volatility you have to worry about. So, yeah, that's the majors out of the way. Let's move on to the minor currency pairs. So, these are also known as cross pairs or cross currency pairs because they do not include the US dollar. They involve major currencies apart from the US dollar. And they're really good if you're trying to diversify your portfolio. So common minor currency pairs are the euro to the British pound, that's the euro to GBP, the euro to the Australian dollar, pound to the yen, and the euro to the yen as well, and then the Australian dollar to the yen.
Yeah, and although these pairs, have slightly lower trading volumes than the majors, they still do offer good trading opportunities, as you said just now. But what you do have to be aware of is that the spreads will be slightly wider because, again, you're not going to see the volumes you do on the major pairs. But you will have some unique trading opportunities. And of course, the benefits are diversification. So it allows you to diversify your portfolio without, sort of just being stuck on the reliance of major pairs. And then they also have moderate liquidity. So the liquidity is not as high as the major pairs, but of course they're not as low as the exotics. So, they still are actively traded and they do definitely provide sufficient trading opportunities.
Yeah, exactly. They do. You just got to be aware, as you said, spreads are wider on these, so your costs are going to be higher when you're trading them.
Yeah.
And there is a case for sometimes more volatility than you see in the major pairs. So there is a little bit more risk as well. But still, if you're trying to find a way to diversify away from the major pairs, really, really good place to look in the minors. But yeah, finally, we come on to the exotics, the exotic currency pairs. So these are a really interesting bunch, actually, and they consist of major currency and a currency from an emerging market or a less frequently traded economy. These pairs are known for their high volatility, sometimes very high volatility. There'll be much wider spreads on these, and generally you're going to see lower liquidity as well, so more erratic price movements, especially compared to the major and the minor pairs. Some of the commonly traded exotic pairs are the US dollar to the Turkish lira, the US dollar to the South African rand, which I know Alison is very heavily traded where you're from, the euro to the Singapore dollar, and then the British pound to the Thai baht is also a very commonly traded exotic pair.
And, what's nice about these pairs is that they offer quite a lot of trading potential due to their volatility,
Mm-hmm.
but of course they also then present higher risk trades. They'll have huge price swings and, so of course you could stand to gain more for them, but you could also lose more as well. And, they're very heavily influenced by political and economic events. And sometimes they actually provide more unique trading opportunities than the majors and the minors.
Yeah, exactly. And a lot of these emerging market economies, you have political events that you don't see so frequently in developed economies, and they can really impact the exchange rate for these pairs. So, yeah, if you're a developing world geopolitical nerd, then probably a good place to have a look. But you do have to be aware, as we said, real high risk here. Not just the volatility that comes with exotic pairs, but also the higher spreads. Because of this lower liquidity in these markets, they have much wider spreads, and this will massively increase your trading costs. So you really got to be aware of that.
Yeah, and as we said just now, it's very it's essential to have a strong risk management strategy. So you want to use stop loss orders, you want to limit your position sizes when trading on exotics, and you want to be very disciplined. And I think that's probably one of the most important points, is to be disciplined when trading exotics, just because of the higher risk involved.
Yeah, exactly. So maybe tread carefully. If you're just starting out, don't jump straight into the exotics. Start with the majors, maybe dabble in the minors when you feel comfortable. Then and you've got some experience, then have a look more closely at the exotic pairs. That'll be my advice. So yes, how do you choose the currency pair that you want to start trading with? So this really depends on your trading style and your risk tolerance, and as I just pointed out there, your experience level as well. So some tips to help you make the right choice. So as I said, start with the major pairs. If you're new here, majors, they're the best starting point, hands down, especially the Euro USD or USD JPY. These, they offer stability, low spreads, and there's so much research and analysis out there. I mean, there's so many people talking about trading opportunities every minute of every day on these. They're fantastic learning tools, if you want to think of it that way.
Yeah, particularly if you've got, anything with a dollar, it's pretty, there's a lot of news, there's a lot to go on with the dollar, and it's easy to find that information.
Exactly.
As you said. So if you're another thing you need to consider is your trading style. So if you prefer, as you say, Chris, stability, longer term trading, you might look at the majors. And if you want, I guess, scalping opportunities, or day traders may be more interested in the minors or exotics, just because, you're going to have these big movements during the day, and it's easy to capitalize on those movements.
Yeah, exactly. And you also want to think about your risk tolerance here. And this is where a risk management plan, part of your trading strategy, part of your trading development plan, is really important here. If your exotic pairs and minor pairs are going to carry more risk, and you've got to make sure that you're comfortable and that your trading plan allows for that risk before you jump into them. So yeah, make sure your risk management strategy is solid if you're going to move away from the majors. To be honest, even if you're going to stay in the majors, make sure your risk management strategy is solid, because there can be surprises there, as we saw recently with the yen. So yeah, risk tolerance is very important, and that's closely linked to capital. How much capital do you have to spend? What size trading account you're looking at? So think carefully before you start trading anything outside the major pairs.
Then another factor to consider is diversification. So once you're comfortable with the major pairs, you might want to look at the minors and exotics for additional trading opportunities, something we've spoken about earlier.
Yeah, exactly. So I think that just about sums it up. That's the majors, the minors, the exotics, the differences between them, and how to approach them. Do you have anything else to add, Alison?
No, I think that's about it, Chris.
Super. Then what are we talking about next week?
So I think next week we're going to dive into minimizing your losses, and we'll talk about the strategies you can use, and just little tweaks you can make to reduce your losses.
Yeah, that's really, I think, really important. I think a lot of beginners come into forex trading thinking that the goal is to never make a loss, and that's not true, is it?
No. It's a game of probability. It's a game of probabilities, and you have to be aware of that.
Exactly. So you're always going to make losses. The idea is to keep them as small as possible. So I think a really important episode.
Yeah, absolutely.
Super. Well, I look forward to speaking to you then, Alison. Have a great weekend.
Yeah, me too. Thank you, Chris. You too.
Bye.
Bye.